Hey, what's up, guys? All right, so today's a great day. I wanted to do a training for you guys because we have an investor briefing and stuff like that. But this is something I wanted to break out prior to the investor briefing that we have going coming up here in a minute. This was about rents. You guys hear me talk about it all the time. Like why I love multifamily real estate as an investment is because it does a couple of things for me. Number one thing is it protects capital. But Warren Buffett says it don't lose money, but that really means protect your capital. Like there's very few other investments out there to me that protect capital the way real assets, a real asset like multifamily real estate specifically is what I'm talking about. Next, cash flow. They do cash flow. You're looking for an asset that cash flows. That's one of the other things. The other thing is future appreciation, long-term appreciation. If we buy this property today to protect our capital, we get paid while we wait, and there's a long-term appreciation growth on that specific asset, as well as the tax benefits, the write-offs that come along with real estate, the good leverage that goes along with it. $1 buys you $3 worth of it, if and it's supported by any great debt. Right now, debt's a little shaky in the market, but you got to have good debt, and real estate affords you, especially multifamily cash flow in real estate, great quality real estate still affords you an opportunity to get debt on that. Debt has been put on these assets for hundreds and hundreds of years, decades, centuries. That is how this stuff is done, as well as the ability to scale. Instead of buying one house, you can buy one property that has 100 units or 200 units or 400 units. One or 10 addresses has 400 units as opposed to just one. Think about it. If you bought a business and you only had one customer, you'd be worried when that customer didn't come in. Or you can buy a business that has 100 customers that are on contract to pay month after month after month, and you're protected to be able to have those customers come in. That's a better business. I mean, at some point, it just becomes simple, which is why I love real estate, why I love multifamily real estate specifically. All right. So the other thing I wanted to share with you, because I was talking with somebody about this, think it's important, and I wanted to kind of go over this with you guys on my channel. So thanks for that. Is why I think multifamily property is to me the better one out of all the other real estate asset classes. There's retail, office, industrial, warehouse. There's hotel, which is hospitality. There's a bunch of different classes, but multifamily to me, one, it's easy to understand. People will always need a place to live. Number two, when I look at an investment from this perspective, I'm looking at it like this. And this is something that I took a look at, two ways that I took a look at this. Rents in the United States have continued to go up consistently since 1945. You can Google this. Matter of fact, I'll show you. I don't know if you'll be able to see my graph. If I pull it back, can I pull it back? Can you see it at some point? No. Well, this graph from 19, so basically from 1945, right, has went up, continuously went up all the way to 2023. There's been a consistency. So now when I took a look at a different graph, and this one was the variation between buying versus renting in America. Now, the residential home prices, right, as it relates to buying a property, it went like this. It's like up, down, up, down. And because naturally, now granted, somebody that invests in houses or they're going to get a mortgage for a home, or some of you people out there who like a house is a great investment. Great if you're flipping it, but you're going to have to time these ups, downs, time it, time it, time it. And if you take a look at history across the board, we'll just start with 2008 because everyone likes to talk about 2008, but there was the 80s, there was the 70s, there was the 80s, there's the 90s, there's 2008, there's now 2010, 2000 and 2000, the COVID event, right? The Black Swan event that nobody saw. All of this happened while this line continues to do what it's doing. And I don't think this is going to stop, right? I think as this happens more, as it relates to putting your money into a place that consistently gives you protection of capital, and basically multifamily properties, especially because it's housing, it's different, but it's also hedge inflate. It's an inflation hedge. As inflation happens, when you own a real asset, the value of that asset goes up, and rents are also slowly but surely increasing. So this isn't a bad thing. But I wanted to share that with you and show you on this graph why it's important. You can go online, you can Google that. Again, you always want to take a look at some of that information. You can't really see it. Unfortunately, I wish I could put this closer. There you go. You can kind of, this is the graph as it relates to the buying versus renting in America. All right. And this other one is the graph showing basically from see where I can get this. I got a little bit of light backing off. There we go, right there. I won't bore you guys with that. But basically, that's from 1945 to 2020, 22, 23, somewhere in there, 2022. But the point is rents have continued to go up in the United States of America. Now, this is home prices, home valuations, up and down and down and down. Now, if you want to play this game with your investments, great, do that. But as it relates to putting money in a place where you can actually put your money in a place, you're getting a return on that money, the drip just takes care of you while you wait for your money to double and triple over time. But if you think about it, had you bought real estate, a multifamily property real estate, God forbid, 1945, because that thing is older, and you still had it, and you just kept it for rents, one, it'd be paid off somewhere in like here, and then two, that line would still be going up. Your rents would constantly be increasing. You'd pass this on to your kids. It will become generational wealth for you and your family. That's what we're doing at Bell Capital. My goal is to help the everyday investor get invested in great quality multifamily properties, great locations, great cities, into deals that you normally wouldn't be able to get because they're reserved for institutional players, institutional investors. I'm going straight to you guys. My goal is to put together my first target, 4,000 units, and then we balloon up to 10,000 units. But I want to do that with the little guy, the everyday investor. They're not calling my mom, my dad, your family. They're not calling Sharon. They're not calling Marquise. They're not calling all these different people, Brashana. They're not calling us as it relates to that is concerned. I want to be one of the very few multifamily investors that buys the type of assets because I'm looking at the statistical line. Because I believe that's going to continue to happen. People are like, oh, rents are going to go down, but consistently over time, they've consistently gone up. Will they flatten? Can they flatten? Absolutely. But they're not doing this. They're not going from like, 1,000 to like $0. They're not going to 3,000 to like $0. That has never happened. It is not going to happen because in the United States, we are becoming a renter nation. I think it's valuable for you to learn or for you to understand that. As it relates to also the amount of money and capital available for properties like this, that's not going away. Multifamily is still going to be the belle of the ball as it relates to financing. Banks are concerned, institutional people. New York Life, they actually own multifamily properties. The type of properties we're going after and looking at, not these high cap rate markets. We're talking about 4, 5.5 caps. That's what these groups and institutions and these companies are buying. AIG, Mass Mutual, New York Life, there's other companies, Blackstone, BlackRock, pension funds, sovereign funds, endowment funds for like Harvard University, all these huge companies, all these huge funds, they're not betting on this. They never were. They're looking for consistency to pay returns for themselves, for the investors, and that's what we're doing here at Bell Capital. It's never before been done. It wasn't available to the average person just years ago. It got signed into where we can now go and talk to my friends, family, business associates on social media, Instagram, Facebook, and online, offline. I can now have these conversations with you guys where I couldn't before, right? As long as you qualify. But I think it's important because very few people get this. They're thinking they're going to go buy something, fix it up, and turn it around. We're just looking for, hey, what is a good deal that we know we can get, especially now in the market where things have kind of changed. This changed when the debt market changed, but rents didn't change. Change of assets and ownership may change based on the timeline of the debt, but the rent, the income that kept those assets in the column of being an asset, from 1945 to 2023, and I believe it's going to continue on going. It's not going to stop, guys. People are still going to rent. They like the amenities. They like what they're doing. We are becoming a renter nation. People rent and lease everything. That's not going away. So I wanted to share that with you guys because knowing and understanding what I'm looking at allows you to kind of see what I'm seeing too. Now, if you do something with me, great. If you don't, I understand that. But bear this in mind. This is a statistical trend that is on the uptick, and it is continuously happening. This is also a statistical trend that you can track all over the board, and this has not changed. It's going to continue to do that, up and down, up and down. Do you want ups and downs in your returns, or would you like some consistency in your returns by just investing in properties that cash flow, that you can hold on to long-term, and you're going to have long-term appreciation based on the income, not based on the emotions of the market, right? Nobody wants to chase that. All right, so I hope this helps. If you guys need anything, feel free, let me know. Like this video, share this video, comment on this video. I would love to talk to you specifically. And you guys know this. Where you live at now, have the rents consistently gone up or have they consistently gone down? I'm not talking about, in a bad way. Just be honest. Take a look at your city and you tell me, leave it in the comments. Has your city's rents continued to rise and you're like blown away? You're like, dude, I can't even believe people are paying for this. And you see what they're renting. Let me know about that. I love to see your response in the comments. So subscribe to my channel. We want to continue to grow. And man, I want to make videos for you. I want to answer your questions, whether you do something with me or not. This is what I'm thinking through. And man, I love to connect with you. So let me know if you need anything. Go to bell-capital.com and you can either schedule a call with us, or you can click get started or invest now, and you can see what it is we're doing and how we're doing it. Love for you to be a part of that. Love to meet you personally, talk to you. Myself or Bashana can answer any questions you got, and we're here for you. So you guys rock out. Have a great day. Let's go.